Hi everyone, Ivan Desjardins with Remax. I'm here to give you some market update on how the market is doing right now in Halton Hills. I know I received a lot of comments from either email or even you meet me in town and you say you appreciate the little videos on knowing how the market is doing in Halton Hills. Well, so far this month we've sold 62 properties with an average price of $755,000 and selling in 26 days. So that is pretty comparable to last year in terms of numbers, because last year we sold 55 properties in November. However, the average price was a little less, was only 680. Well, I say only. It's still, quite substantial. That is still about 10% up year to year from last year. I know we've lost 10% from the peak of this year and in April, but we're still 10% year over year up. And the average days on the market last year was, let me just see, 24 days, and this year's 26 days. So we're pretty even with last year. But I wanted to pull out some a little bit more, let's say, drastic numbers or whatever you want to call it. Going back to 2015, we had about the same amount of sales at 74 and selling in 30 days. But however, the average price was 604. Quite a bit of difference. And if I go back 3 years, if I go back to 2014, we had an average price of 514, selling in 35 days and 60 properties sold. So as you see, pretty much the same amount of property sold for year to year, month to month, and selling in a pretty much the same amount of days. However, when you look at the average price of 514 compared to today at 555, that is a 45% increase in 3 years. That's a whole lot of money. Probably, like I said, or not probably, but the reason why prices have gone up so high is certainly not because, salaries has gone up and people overbid. It's because of the low interest rate. And this low interest rate has made the payments more affordable, and people have been able to buy more higher and higher and higher. But I've referred to this charts many times, and as you can see over the years, over 50 years here, you can see it goes up, it goes down, and now we have seen this big swing. And, to me, it's poised to adjust a little bit. There's no two ways about it. And if you look at this new stress test that's coming up in January, a lot of people still ask me, what does that mean? It means that even if the bank gives you, let's say, 3% interest rate, I'll use a round number here, you'll have to qualify for 5%. Which means that if you're buying, let's say, a round number, let's say in around $700,000 house, and you have a combined income of about $100,000, your purchasing power will drop of about $150,000. So as you can see, the low interest rates have really fueled the prices to go up and up and up. But if the interest rates keeps on going up, or even if they continue to qualifying us on a higher rate, which means that the buyers will have to readjust their price and come down a little bit in price. So will be interesting. It will be very, very interesting in January, February, like the spring of 2018, to see if this new stress test or higher interest rate will play a role into adjusting the value of the homes. But in the meantime, things are selling fairly quickly, still fairly good, pretty normal. However, if someone wants to buy now and they're debating, should I buy now before this new stress test comes into play, I would say probably yes. Even if the prices were to decline, if you can lock in for 5 years at this lower interest rate, you'll be well ahead of the game, in terms of waiting and trying to maybe put more money down. Because I've got another sheet here also that says if you wait, right now, let's say you have 10% down and you wait, like a couple of years to wait till you have 20% down. Well, if the interest rates is higher, or even if the prices have increased, assuming I'm wrong and the prices of the home keeps on coming up. Either way, it's going to put you in a different category in terms of trying to buy a home. So again, when is the best time to buy real estate? They always say it was yesterday. But real estate is a long-term investment. You can't look at it for a 3-year or 5 years or even 10 years. You have to look at it on a longer period. And usually you have to look at it not as a place of residence, not necessarily as an investment to flip. It works from time to time, but on average, if you're looking at it for your home and a place to stay, it's a good investment, and on the long run, you'll have a place to enjoy and raise your family. Now, if you have any questions regarding this information, I'll put the files under this video. If you have any question whatsoever, feel free to send me an email, text me, whatever, and I'll be glad to answer any question. In the meantime, thank you very much and have a great day.